So I got to tell you, Matt, I feel like it was one of the more dramatic moments in finance that I've ever been part of. And then he says, after 60 years, it's time and I'm stepping down. And there's a standing ovation. It was just an electric moment.
He said, I have no intention of selling a single share. He said 0. And the room just erupted.
One way to look at Berkshire is as a flywheel that has gotten bigger and heavier and spun faster and faster over the last 60 years.
As long as Warren's around, there won't be any major second guessing. Greg will have the ability to come into his own as CEO.
What you see in enduring business models, and especially that's a theme that's very clear across my research so far, is that like tradition is embedded within the culture of the organization.
You're watching Excess Returns. I'm Matt Zeigler, joined today by Bogumil Baranowski. How you doing, Bogumil?
I'm doing very well. I'm really looking forward to this conversation.
Me too. We're about to play clips from a bunch of our friends who were at the Berkshire Hathaway meeting when, little tiny announcement went down. You were there too. You loved the Berkshire meeting. You told me I should come and I didn't and I missed out. Why do you keep going back?
It's such a special event, like thinking ahead of this recording. I've been to so many annual meetings of different companies, shareholder meetings over the last 20 years, and all kinds of investor events in New York and around the country and around the globe. And this one really stands out, and I'm sure that throughout this conversation you'll see more why. But it's just a special event, and not just the main event, but everything that happens around it, the people that come, the variety of voices, opinions that you get to hear, and how open it feels. You can strike up a conversation with somebody just grabbing a coffee outside of the main event the day before, and people are just very, very open, very friendly, and they come from all over, and it's not an easy place to get to, and it's a pricey weekend to be in Omaha, but we still do it.
What do you think is it about fostering an environment where you can just walk up to anybody like that? Because that's a crazy thing to say out loud. That's really cool.
It's a sense of community. It's that feeling that we have something in common. It's the appreciation for what both Buffett and Charlie have done for us. And only this week I was talking to somebody who discovered Warren's letters in the late 1980s, and just a gentleman in his 70s now, and what an impact Buffett had on him, not just in terms of his financial success. He has done very well for himself, but life philosophy, attitude that you have towards your career, towards your family, towards everything else, people in your life, the respect, the trust, all those qualities that I feel like we might be forgetting, or they're getting lost in the world that feels like it's very competitive. You can't have anything unless it's at the expense of somebody else. It's a very different mindset. Charlie called it the seamless web of trust that just works. You know who you can trust. And I don't know, there's something really special, and we'll talk more about it, but it's a unique phenomenon, and I wrote about it in my Substack a couple of times the last few years. Something special happens over those few days in Omaha every year.
Well, let's dive right into the something specials. We've got at least 4 people we're going to highlight. You're going to mix in some of your stories from being there. I'm going to mix in some of my FOMO. We're starting off with John Candeto, Phronesis Fund founder. Phronesis Fund. John, you're killing me with the name on this. I'm going to get it right. Diction. Syllables. Phronesis Fund founder, Mr. Powerlaw, John Candeto, Jack Forehand. Let's roll this clip.
So I was sitting sort of dead on facing the stage with two investment partners. And, you're at hour 4.5 of the Q&A, and you get the 13th or 14th audience question, and the Buffett says, "Oh, I'm getting the 5-minute warning, and I've got one more thing I want to cover." And it's the announcement that in some sense people have been trying to predict for the better part of 2 decades. And so immediately it's almost like the room got suddenly very still. I think people probably grokked it pretty quickly that this is probably important. I mean, Buffett never does that. And so, and then he did something he never does. He got emotional. Not severely so, but, Buffett, the normally, fluent and eloquent, was struggling for words a little bit, and repeated himself a little bit and said he'd take questions, but never did. And, those kinds of things. And I mean, it's, he knew it was the end, in some ways, the end of an era, the end of 60 years of, 5.5 million% returns. And so, yeah, it felt like a moment.
When you said you were there with two people, was this their first time attending, the people that you took?
It was. So I've the last few years I've in VIA run an investment partnership, and so I've invited partners and just said, hey, I'm going, and if you'd like to come, I think if you're interested in this kind of thing, it's worth attending Woodstock for Capitalists at least once. And so a couple of folks said yes, so they were there. It was their first time, and so they sort of, I guess, didn't have the context of what meetings normally they just kind of end. By that point, you're usually on hour, I don't know, 7, probably 6 or 7 of the Q&A. And then Buffett kind of just says, that's the last question. And, and then they'll go on to the actual formal meeting. So I suppose they lacked that context, but it was fun to be able to share that moment with some good friends and partners.
I love not just that he calls it the Woodstock for Capitalists, but the announcement people were trying to predict for 2 decades. Mm-hmm. I mean, my entire time, I feel like since I learned about really who Warren Buffett was, not as just some character in the ether in the investment space, this has been the question for 15 years, pushing 2 decades. Surely he's going to retire, and here we are at 94. What do you think about, like, this is just the longest, most known prediction ever? That's weird, right?
I remember recordings and transcripts from meetings from, I think, more than 20 years ago, maybe even 25, when people were asking him, who is next if you were to step down or if something happened to you? So I think they were both used to those questions, like who is next? Because it's such a unique story, a phenomenon, and not just financially speaking, it was an educational experience for all of us, the existence of this business. But one of the main qualities about it is the longevity, right? He took over this company in the late 1960s, early 70s. And for the first decade, very few people knew about it. I actually got to talk and have on the show people that went to the very early meetings in the 80s, and they couldn't even fill up a small room. And they would ask employees and the staff from the venue to come to the meeting just to fill up the room. So Buffett doesn't talk to an empty room. So in the 90s, Buffett was more known, and obviously the last 25 years, this became a huge event, and the venue was moved, I think, about 20 years ago to the venue where it's now. It can hold, I don't know if it's 20 or 25,000 people in one room. And then the last decade or so, maybe less, it's been streamed so people can watch it at the same time. But what John points out is that something we knew is coming, we just didn't know when. And I'm sure it's going to come up in this conversation, how there was this moment where we felt like something big will be announced when Buffett hinted that he has something to share. And it's one of those things that you're ready for it, but once it happens, you realize how you were not ready for it. So that was the sensation. I'll save my impressions until the end. So I'm just going to talk about John's perception. I got to spend time with John at the event. So it was wonderful to see him in person more, and fun to talk to him. So it's one of the benefits of being there, which he hints as well, that it's not just you, but it's also the people that you bring with you. And when I saw him, he had a few people with him that were coming for the first time, which he mentions in this video. It's fun to see people's reactions, people that come for the first time.
I like that John makes a habit of this too, of inviting people along and saying, if you're interested, I think you should experience this. Let me help curate this experience for you, because maybe you weren't going to be there this year when this thing happens, but I'm sure in prior years, and please save your full experience for the end, but you've also experienced stuff along the line, whether that's happenstance meetings with people, whether that's other announcements that were made. You've probably seen some other cool stuff in that presentation too, right?
Oh, yeah. I mean, of course. this was just an end of an era, and we'll talk more about it, and a masterful delivery, which we'll talk about more. But it's a very holistic experience, and I was trying to frame it, and I would call it an immersion in the idea. So you could read everything that Buffett and Charlie ever shared, but to actually be there and be fully immersed, it's almost like a retreat. We go to retreats to be fully immersed in a certain concept, whether it's meditation or yoga or surfing. We go to a retreat. We want to be fully immersed, up to your neck or maybe higher in it. And that's the experience. Every conversation is about something that one of them said at some point. And it's very unique, and it's the main event, but it's also the conversation I had with John on the couch at a hotel in the lobby when we're hanging out. You have all those moments with people, and he's introducing me to the people that he brought, all those moments, and random people walk up to you or are waiting in line with you and say hello, and it's just this openness and the ability to learn. It's a corporate event that's not a corporate event. It's different. You have to see it to know what I'm talking about.
Well, let's go straight to our next clip. This is with Ted Merz. And Ted's extra interesting for being at this one because, ex-Bloomberg guy, journalism, he's done this stuff for years, ghostwriter and master communicator for more people in private equity and venture than any of us would believe until you talk to him about it. All-around amazing follow on LinkedIn. Ted was there too. Let's get some of his impression.
So I've got to tell you, Matt, I feel like it was one of the more dramatic moments in finance that I've ever been part of.
Absolutely. This is like you were there. You bore witness to an actual historical moment.
Yeah. And I'll give you a little bit of framework, which is that even though he's 94, I don't think people had the sense he was about to resign. That was not the feeling in the stadium, or in the arena. It was because you just don't see it coming. I think people thought he would just keep going. And for perspective, for people who've never been to a Berkshire meeting, what it consists of is, after the opening statement, essentially 5 hours of Warren Buffett answering questions from shareholders. There's really nothing like it in the world. He says question 1, question 2, people get up and they ask a question, and, some of them are tough questions, some are easy. But for 5 hours for a 94-year-old to hold out and tell long stories, it's amazing. So picture that you've been in the arena for 5 hours. He's been answering questions. And then he says, I'm getting a red light and I only have 5 minutes left. So we don't have time for any more questions. And you're like, okay, we're winding out. We're about to get our coach, walk out. And then his voice changes, his tone changes, and he says, I think there's one more thing I have to say. And you could feel the room change. He says, there's one more thing I have to say, and the time has come. And, it was, you could hear a pin drop. It just was, the whole mood changed. And then he said something even more dramatic, which was effectively, what I am about to tell you, I have only shared with my 2 children, Howard and Susie. I have not told the board. I have not told Greg Abel. So no one knows. So, the drama is enhanced. And then he says, I will ask the board tomorrow to approve my proposal that I step down from Berkshire at the end of the year. And that I expect it will be unanimous. So, and at that moment, there's a spontaneous standing ovation by the crowd that just goes on and on. So it's an incredible thing. We really didn't expect it. He drops it at the end of the meeting. There's no questions. He says up front, he says, I'm going to tell you something. There's no questions. I'm going to tell you no one in this auditorium basically knows what I'm going to say. And then he says, after 60 years, it's time, and I'm stepping down. And there's a standing ovation. It was just an electric moment. Electric. It was incredible. And, so many of the things that Buffett does have incredible timing. He has incredible timing in how he purchases securities, which is why he has the track record he does. But he has incredible timing in life in many other ways. The delivery at the meeting, the fact that there is this meeting going on. So I think, and the fact that he really goes out on his own terms, you know, and I think this was underappreciated. But I mean, how unusual is it for a CEO to tell the whole world something before he tells the board? It's really not kosher. You know, it's not cool. Okay. There's a twist. So, I mean, he's like, this is what we're doing. And he says it in a nice way. But I mean, that alone, I think, is incredible. He says, the line he had was, and this is going to come as a surprise to Greg. He didn't tell his successor. He didn't tell the board. I think that is an underappreciated thing of talking about, you know, sort of the man in the arena he is really living the way he wants to live. He's saying, this is how I'm going to live my life. I am resigning. I'm telling the whole world. This is really not up for debate. You know, it is the same kind of decisiveness that he showed in stock trading and investing. And it's just really, it was really, really incredible. And people stayed, they clapped, and then it just ended, right? And a couple of my reactions to that were, well, first of all, you could see the CNBC monitor, and immediately the anchors came on and said, you know, Warren Buffett's resigning. And one reaction I had was that you know, you really couldn't appreciate it not being there, because the media, for all the benefits it does in amplifying information, it also flattens what we're hearing. And so if you're watching that at home and you hear Warren Buffett has resigned, the other things they're reporting, you know, Warren Buffett is against tariffs, or he's like whatever else, it doesn't nearly convey the nuance that you felt by being in the room. The nuance of all, you know, the caveats and the emotion, the way his voice was kind of cracking, the way people rose in the ovation. It wasn't staged. It wasn't planned. It wasn't expected. So all I'm saying, I think one of the lessons to me, and I like the metaphor of being in the arena, and that's of course a famous Theodore Roosevelt quote, "The man in the arena," is it's important to be there. It was important for Buffett to I think, to present it that way. It was important for people to be there to hear it. And I was just privileged to happen to be there to see it.
Of course, Ted saw this as the drama in financial history.
Yeah.
This is Mike Bloomberg smashing a phone and him going, that's the 800th phone I saw smashed. I'm going to make a note about this and tell these stories again one day. But this idea that Ted expresses, like, of course, he's the one who notices what CNBC is doing. Like, media flattens what you're hearing. That was one thing that really blew my mind. The difference of me hearing about it, I don't know, on Twitter or wherever I saw the news break, versus you physically in the room. What do you make of the way Ted's describing this?
I think it's beautifully put. You know, he says it's the most dramatic moment in finance that he can recall. He talks about the moment being electric, and he contrast that with the fact that when you want to report on the fact, like CNBC did, it comes out flat because you were not in the room. And he talks about this spontaneous moment when people got up and applauded. I mean, you could feel the room vibrate, and some people were tearing up. I mean, it was a really powerful moment where something happened, and I'll share my thoughts until the very end. But I agree with him that being in the arena that he talks about with Teddy Roosevelt, you know, you have to be in the arena. It's a whole different experience. And he says it was a privilege to be there. And I think we're all, you know, very fortunate. More people came this year than any other year. I think I'm correct about that. And I think that was the sense, you know, we lost Charlie and we wanted to be there just in case Warren decides not to be a part of it in the near future.
This idea of, so I love the man in the arena analogy. I also love, from talking to Ted about this, seeing the man in the arena, but being an attendee in the arena too.
Yeah.
And that dynamic here of not just the man in the arena in the way that sometimes it gets trotted around, but actually bearing witness live to somebody making a decision at the level, at the stakes that Warren Buffett made that decision. And of course, Ted's going to notice a detail like his voice cracking and that you could hear a pin drop. This is Ted's training just coming out in full force. Is there anything else about that electricity that just
Buffett
can't be conveyed?
Was very emotional. If you actually even replayed that moment when he delivers it, he was very emotional, and he doesn't get emotional much. I mean, I know he has emotions, and given the work that he's doing, he can't be too emotional, and he's very practical about things. And we're talking about being the CEO of a corporation. When did you hear last time a CEO, crack up a little bit and soften around the moment where they decide to step down? It doesn't really happen often. But it's his baby, it's his creation, it's something that took him decades to build, and it, I think, exceeded the expectations of them both, and definitely of most of us. And he is deciding to hand it over. And we'll talk more about the handover, but I think there's a whole story there too, how it was done and how his kids knew, but nobody else knew. We were the first ones to hear it. I think it's a very powerful, remarkable thing.
It's a wild thing to be on a stage and say,
Yeah.
My kids know this. I'll ask the board tomorrow. But you and my closest friends, now I'm going to share this with you. Let's jump. I want to jump into the next clip. This is from Eric Markowitz, Mr. Nightcrawler, Mr. Big Thinker. His book Outlast, forthcoming. He's working on it now. Make sure you check him out online to follow it along. But Eric Markowitz, here's him talking about how, hey, he wasn't in the room.
You say I was at the Berkshire meeting. That's technically not accurate. I was in Omaha meeting with some of my closest friends. I didn't actually go to the physical Berkshire meeting. I watched it from my hotel room.
Which might be the greatest idea I've ever heard, just for the record. I'm not a good.
It's the only one. I think I went last year, and I don't do great in like crowded spaces and long lines. And last year when I went, I didn't get a great seat, so I was like stuck behind a pillar and couldn't actually see Warren, and ended up just going into kind of like the other area where you can watch it on TV, and sat in some uncomfortable folding chairs for a couple hours. And then I realized this year, I don't need to actually go. I was going really mostly just to see some really close friends and people who work in the industry. And I had like a big day of like lunches and hangouts after the meeting. And I said, let me just, sort of save my energy.
So you're sitting there, you're watching it on the TV. Do you see the announcement live? Do you catch that part live?
No, because I was actually, I headed to a lunch at like 1 p.m. local time. And I guess he made the announcement something like 12:50. So we were sitting down, and then a couple guys came in and said, did you hear? And we said, no. And, we kind of talked about it at the table, which was actually a really nice way to experience it. At a table with like 8 or 9 folks who were just kind of sharing their reflection on how it felt and just how amazing that journey had been, and how much, class it really takes to go out in such a high note.
So you've thought way too much about this, and you're thinking way more about this in the book you're working on. Breaking news like that, like, give me the analysis on Warren Buffett, how he shared that decision, I think is really powerful.
It's funny when I first found out, I said, wow, he really buried the lead, I guess, with his announcement. He waited to the last 5 minutes. And then as we talked it through, I realized actually that was the perfect way to announce it at the very end, because otherwise the entire meeting would be about his announcement of his retirement. And so I thought it was a smart and just, very on brand, thoughtful decision that he made to only bring it up at the end, and in a very, I think, like positive way, in a very emotional way, to really like create the right order of succession. So it sounds like he didn't really even tell his successor in advance, which is quite striking. And I think also just, again, he's clearly a deeply thoughtful, contemplative person. And so in that moment, it wasn't particularly surprising, I think. I think anyone who's followed Berkshire and knows his whole philosophy, he's someone who is like thinking deeply about the future. And so it doesn't surprise me that he's already thinking about his succession and going out really, hopefully he's still around for many years, but just really starting to pass the baton while he's still here.
This experience of being at the table and having people come in and say, "Did you hear?" There's also something amazing. This is the three wise men, going, "Did you hear there was a baby born unto a manger," or something. Yes. Just Eric telling this story is just kind of wild. What did you think about this one?
Well, first of all, I'm a big fan of Eric and Eric's writing, and I got to spend some time with him in Omaha. I'm looking forward to the new book. I love the topic. He's going to write about companies that have lasted for a long time, and we chatted more about it over there, and I'm going to be a guest on his podcast. I'm looking forward to talking to him. He touches on a bunch of things that are really important. So one, he decided not to go into the main meeting on Saturday because it's a lot of people, and I can relate to that. I don't like crowds. I even wrote a book, Outsmarting the Crowd. But I make an exception. I actually make a collection of exceptions for Warren, and used to be Charlie, and Omaha. So, staying at a hotel I wouldn't stay at because the prices are so high, having a complicated flight in and stuff like that, and then standing among so many people in one room. Not the place where you would usually find me, so I can relate to what he's talking about. Anyways, I think it's still worth going in and being in the room. And if you come with somebody that knows their way around, you'll be better positioned in the room. That's my thought. He decided not to go. I understand he was spending time with friends. I got to see him the day before. And that idea that the whole town knows that this is happening, all the taxi drivers know, all the hotels know. You go to any restaurant and they know you're coming from that meeting. You go to the most remote sushi place in Omaha and they know that you're coming from the meeting. And the fact that people talk about it, and I'm not surprised that even though he wasn't there, the news reached him when he was having lunch at the moment when the announcement came out. I think it's a really powerful thing. I can't think of any other shareholder annual meeting where you would have that kind of a reach, even like locally, not CNBC, but like locally, that the news spreads like fire, that even if you're hiding, having lunch somewhere with friends, you'll find out if something important happened.
You'll find out word of mouth. It feels like, and again, Eric, like Ted, I love people who bring the journalist experience into talking about this. Is very specifically why we went to both of them for comments. He talks about going back and rewatching it then too, and how Warren really buried the lead, or he said something like that in that clip, which I also think is amazing. Going, it's the grand slam in the bottom of the ninth at the World Series. It's one of these things that's just going to spread like wildfire, and Warren made sure this was this tucked away secret right up until it came out. How did you perceive that?
He knew he can't drop it too early or at any other time because the whole meeting and the rest of the questions would be about that. I'll mention here, just for the benefit of the audience, it's a very unique meeting because usually you don't have such an open floor for anybody, shareholder questions like you have in Omaha. Usually it's very structured, and there's actually a structured annual meeting after those remarks that are televised, and you can stay for that and obviously watch it as a shareholder. And then, it's a very formalized corporate meeting. Usually companies, at least I don't know of any, that have an open floor where the CEO says, ask me anything. Obviously the CEO can say, well, I can't tell you that, but there's no other company that I know of that does it, that says, come and ask me questions. And Buffett has been doing this for multiple decades now. You can ask him questions about life, raising kids, investment decisions, saving, education, career, anything you want. His favorite book and so on. And he feels like people have to get to know him. And I think there's a powerful lesson there that he wants to see us as partners in this business. And he feels that we have to get to know him that way for us to feel comfortable that he's the right person to be running the business. we'll talk more about it, but I'd love to learn more about the people that will be running Berkshire after he retires. But that's a whole other topic that I'm sure we'll talk more about.
A whole other topic that I can't wait. Maybe there'll be a book on this one. We're going to go to an Adam Mead clip yet. Adam Mead, Mead Capital Management, overall just capital allocator, Berkshire insider in so many ways. Jack Forehand, let's roll this Adam clip.
It was right there in the arena with whatever the arena holds, probably 17 or 18,000 people sitting there. As I have been I've gone for 12 years, the 2 COVID years. But I've been to Omaha 12 times. I was in that arena. Whatever that 5, 6, 7 second delay before it got out to the world, I was among the very first to hear it. And yeah, it was kind of, I mean, given his age, he'll be 95 in August. It was not a surprise, but it was surprising at the same time. Like, you just don't, you know it's coming, but oh my gosh, this is really happening. And there was kind of this collective, gasp almost, like, actually he's really doing this. He's really saying this right now. And then again, just, this massive arena in Omaha, dead silent, like everyone just soaking it in. And as it went along, it really started to hit that, wow, okay, again, not surprising that this is coming. We all knew it was coming, but just this feeling of, first, I think, wow, like this really is kind of the end of the Buffett era. And, it was quite emotional. It really was quite emotional. You kind of you couldn't help but kind of just get choked up about, this man that you've come to love and admire, and, just feeling like, okay, this is the end. And then just kind of processing it afterwards with folks, at a lunch afterwards, and, immediately afterwards, and the days that I kind of had this sense of, I don't know, almost like I've described it as pride. You just, again, here's this guy who's kind of my intellectual grandfather, if you will. And I just felt proud of him. Just what an incredible career. And again, I kind of come back to that word, love. I mean, I think the people in that arena are there because they love him, not just for the financial wisdom and all that, but all the other things that he taught us along the way. So it really kind of came to a point when he made that announcement.
Yeah, and I think you kind of hit something on the head with that. That was your 12th time being there, and for a lot of those people, they had, some of those people have been going there for decades. I don't know, how long has he had this annual meeting? I mean, it's been at least 20 or 30 years, right?
Goes back, I believe. Looking over my shoulder here. There was 13th annual meeting has a little snapshot of the National Indemnity Kitchen, where literally a dozen people used to come out to the annual meeting, I think in the 70s.
Okay.
It's been happening, all along.
Right.
I think it really started to grow, as Buffett wealth and fame grew. But I mean, it's been in its present form few decades in the arena, massive seat capacity and folks letting
Adam, with this statement of coming back to the word love and the people in that room loving Warren, and I want to connect it to the point you made right before this clip. This was the segue in my mind here, is that this is a shareholder meeting, and Warren, in some crazy way, really seems to make you feel like he's a shareholder too, which he literally was, but he's a shareholder, you're a shareholder. This is a meeting of shareholders. Let's talk like people in a meeting. That's kind of profound. How'd this Adam Mead clip hit you?
So Adam is a good friend. I got to see him in Omaha at Guy Spears Value X side event that happens on Friday. And he's been on my show more than once. He's a great guy. He wrote an incredible book that I highly recommend. That's a detailed history of Berkshire, like no other book, about the company itself and the stories behind it, and and the context and the depth of research he went into to produce that book. It's just remarkable. And Adam is just a brilliant person, fun to talk to, and I'm glad you had him for this clip. He talks about this collective dead silence. And I think there was this moment where, I don't know, we were processing what we were hearing. Because if you actually read the transcript or listen to that moment again, Buffett doesn't immediately say, I will retire at the end of the year. He says, Greg Abel will be the CEO, and he will be making all the decisions, capital allocation, operations, everything. He kind of builds up, explains gradually what will happen. So there's this dead silence for a long period of time, and I think we're all just processing. The other thing that he mentions that Buffett is his intellectual grandfather. Adam and I actually talked about Adam's actual grandfather at some point in one of the episodes. But it's such a powerful revelation. You know, it's somebody that I have not personally met. I've been in his presence. I asked him a question at the annual meeting in front of that large 20,000 audience, but I have not been in the room with him. But I feel like he had such an impact on me and so many people I got to meet in the process. So I think it's a cool image of thinking of Buffett and Charlie as our intellectual grandfathers, people we really learned something from. And Adam knows this company better than most, and I'm so glad he was a part of this and talked about those two moments, dead silence and thinking of Buffett as a grandfather.
Yeah, in Adam's book, is it a complete history of Berkshire Hathaway? It's something like that.
Yeah, he jokes that it's not complete anymore. He has to add an update. It's pretty complete, Adam.
The incomplete history of Berkshire Hathaway, Adam Mead. I love the grandfather too. I like the generation skip of being not your dad, not your mom, not your immediate parents, but that grandfatherly wisdom. There's just something about that. So let's jump forward. One of the other questions we asked these same people about was the future of Berkshire, looking forward at what this means, because let's face it, there's still a company at the heart of this. And this is some crazy stuff. So we're going back to John Candeto, Sibilance, Phronesis Fund founder John Candeto, a flywheel. He's got things to say about it. Roll the clip, Jack.
Yeah, I think, I mean, one way to look at Berkshire is as a flywheel that has gotten bigger and heavier and spun faster and faster over the last 60 years. And so it's notable if you look at, when Munger passed, a little bit of stock volatility, but broadly trends just continued. Buffett will remain chairman of the board. So, I think the stock was down a little bit this week, but, I wouldn't expect huge moves. I mean, I'm not trying to predict anything, but, the flywheel that has spun for years, I think, probably doesn't slow meaningfully. But as we know, all flywheels have friction, and so they slow eventually. And so the literally, trillion or $2 or $3 trillion question now is, what does large capital allocation look like in Berkshire post Buffett? And so Abel, almost certainly will kind of come in as CEO with $300 billion plus in cash. Ted and Todd, the two primary investment managers, to date, what's been disclosed is they're managing, 10 billion or tens of billions, but not hundreds of billions. And then of course, Ajit, running the insurance operations. And so I think it'd be arrogant to say anyone knows. But equally, I think it'd be maybe a little naive to assume that, all the magic was Buffett, and once Buffett's gone, that's it. I mean, he spent decades building a thing that he intended to outlast him. And the things he chose to build in his life, he built pretty well. I think it'd be, probably betting the wrong way to assume that he didn't get a fair bit of the important things right there.
What about in terms of just the meeting itself? What's the meetings? How many times have you been? What have they meant to you? What do you hope they mean to you in the future going forward?
Yeah, so that was my third time there, and I was fortunate. The last time I was there was 23, which ended up being the last meeting that Munger was at. So I'm very grateful I could attend that one and then attend this one, which almost certainly will be the last of its kind. We don't know what next year will look like. Someone in the audience asked a question of Greg Abel specifically, the CEO elect, and And they ended that question with, they say, here's a question for Greg. And by the way, we look forward to getting to know you better. And Buffett is just such a, giant in the world that he's in, that even in years past, Greg has been on stage with Buffett and he said some things, but he's not, when it's come to the kind of broader business investing and life discussions, Munger famously mostly just said, I don't have anything to add. And every now and then he would offer a bit of a soliloquy on something, and it was usually short and kind of pithy and direct. But, it's, a stage without Buffett, which might be next year, might not, will be very different. And I'm very curious. I look forward to getting to know Greg more. Buffett worked with him for 25 years. So, this wasn't a fast decision. The board didn't go on an executive search. And so there's a reason he's going to be in that position. And then who he fills in around him, I think will be very interesting. This is a culture that Buffett built and led, but it's a very deep culture. And I think we're going to learn sort of how deep that is within the firm, and then also how deep that is outside the firm. So I intend to keep going. The number of folks that are there, it's just a wonderful place to go meet people, almost whether or not you go to the meeting. But I think there's probably years of wit and wisdom left in the Berkshire community, and I look forward to learning from it.
I have so many thoughts inside of this one, not the least of which I love the flywheel idea and just how Berkshire spun up over time and keeps spinning. But also, and John makes me think of this, I almost want to think about the worst case, I say worst case in air quotes here. It's not a stock story, but it is. The worst case is they built like a giant value and quality index fund. Even if they can't allocate capital efficiently, they kind of built this amazing index fund that does lots of things that I love that I hate about a lot of index funds. Like, it doesn't pay dividends. It retains them all. It's really interesting and smart and cool that it's inside of this wrapper. And hey, it's a great compliment to those Mag 7 things and whatever else. But on the other hand, there's this question as what's the new scenario for capital allocation, which is that's the only way it puts up another, 5 bajillion% in the next 4 decades. How do you think about this?
I like the way John puts it. It's a flywheel. It's bigger and heavier, and it's been spinning faster and faster. They created something that goes beyond what you see on the balance sheet or the income statement. They created a culture. Companies want to be acquired by Berkshire because of what Berkshire represents. It's fairly unique, right? Because there's no shortage of capital out there seeking opportunities. But there's something unique about being a part of Berkshire. And obviously they have the private market investments where they acquire the entire businesses, and some of them are local businesses in Nebraska. And then there's a collection of businesses many of us maybe are more familiar with that are large publicly traded companies, some of them that have been a part of our life for many decades or a century, and that Buffett has owned for decades, a long period of time, right? But anytime Berkshire decides to become a meaningful shareholder of a company, it's a certain endorsement, not in terms of, good investment or not. Do your own research, but just that we looked at your business, we compared it with everything we see, and took into account everything we know, and we feel like you're doing the right thing. Having Berkshire at some point buy a meaningful stake in Apple, for example, the most recent one, recent meaning the last decade, what an endorsement it is to get a phone call from Buffett. Or I think Tim Cook was the one that called Buffett first a few years before that acquisition. And I think the story goes that was asking Buffett about what to do with the cash that Apple was accumulating on the balance sheet. But anyways, to have that kind of endorsement, I would mention what John brings up is that moment when, I don't know, it was somebody from the audience, somebody asked at some point that we were looking forward to getting to know Greg Abel better. And I think that's a very powerful revelation that Charlie and Warren took up so much of our attention and the stage over the last few decades. And I think we're all looking forward to getting to know Greg. There's Todd and Ted managing the publicly traded equity side. I think we're looking forward to getting to know them. I got to meet Todd at some point. I was very impressed with what he brings to the table. But I think we all would like to see more of them out there, and just learning more about who's going to run the show.
Perfect tee up to go back to Adam Mead, because Adam actually had some stuff about the plan in this clip. Let's roll this one, Jack.
I think about it all the time. I've thought about it a lot. I'm convinced this has been the plan, that Buffett and Munger had this or very close to this version of a plan in terms of changing of the guard, if you will. First in 2018, when Buffett made Greg Abel vice chair of non-insurance operations and Ajit Jain vice chair of insurance operations. That was kind of the first step. I wrote in my book that I thought it would be Greg the board picked as the next CEO. Munger let that slip, I think, in 2021. And so, they came out. You've kind of just got this gradual transition that's happening, and it's been happening in front of our eyes. It's not an event; it's sort of this continuum that's been happening. And Warren has talked about giving Greg more and more responsibility, and Greg has proven himself. And so this is kind of that next logical step. Greg is CEO. Warren will remain chairman. We're so fortunate that this is being able to play out like this, because as long as Warren's around, there won't be any major second guessing. Greg will have the ability to come into his own as CEO, make some changes, maybe make some acquisitions, but he'll have that sort of Buffett shield around him. But I've spoken to, probably a dozen of his managers during my time out in Omaha and over the years, and they all have good things to say about Greg. They talk about how available but doesn't pose himself on them, but he's much more of an operator than Warren ever was. I've had no reason to doubt Warren was saying, praising Greg. But to hear it from the manager that, he really is a great operator, a great capital allocator, and a great boss really speaks to the fact that this momentum that Berkshire Hathaway has will continue into the future.
This idea that Adam talks about, convinced this was the plan, basically the changing of the guard since 2018.
Yeah.
So now we go, Greg's the guy. It's been this continuum. It's already been started. There's no snap judgment here. There's no...
No.
We hired this guy from outside and now next year he's running this meeting there's nothing like that going on. It's this person was here, gradual transition, we're slowly bringing it up.
Mm-hmm.
But then this is my big question. You just said you haven't really met Greg yet. None of us have really met Greg yet. Not in the way we feel like we're comfortable with Grandpa's weird friend. We don't really know. He's just hanging out over there. He's got funny pants. We got to find out what the details are. That Buffett shield, Buffett's still alive. It's not gone yet. How important is that Buffett shield for Greg?
There's this idea of succession. And I work with families that have had wealth over multiple generations. And I have a good friend that Jay Hughes, who brought up something to me that his father told him. I hope Jay doesn't mind, I'll share it. I think he might have shared it publicly already. But his father was on the boards, Jay's father. Jay served as a lawyer to many wealthy families. He continues to do so. But Jay's father was on boards of various companies a while ago. And he would ask the new CEOs that just got appointed, who do you have in mind to take over after you? Which is a fascinating question to ask somebody who just accepted maybe the highest accomplishment, position, role they will ever hold in their life. And here you are asking them, who do you have in mind if you couldn't serve this business? And it's such a powerful thought and revelation, thinking about multi-generational wealth, a company that will outlast us all. Who do you have in mind? And I think Adam's point here is that it might seem like a singular, momentary, as Ted said, dramatic, electric event. But it took a while for us to get here. And the people were groomed for a while. he talks about the layer of Berkshire executives that he got to meet, that Adam met, and they're all in place there. They respect Greg. Greg is a great operator, and it's been all in the workings for maybe a decade, maybe longer. So what we were seeing, it's just that moment of handing over the torch, but the thought, the question, the process, it's been happening for a while.
It's amazing to think about, just, again, to borrow that old metaphor, that snowball rolling and all the different layers.
Rolling.
I also love, and I take this from Jay Hughes's work too, and we use this. It goes into all the financial plans we do, but it's just part of the discussion is that day one, like asking who your successor will be. And why am I talking about this now? So to be sipping champagne and enjoying the confetti. It's like, no. The core of this is the questions that always must be asked are, what happens if this continues longer than I think it'll continue? What happens if this ends sooner than I think it'll continue? What happens like if I get sick or I'm stuck in this role but I can't complete the tasks? And what happens if we get sued or some legal thing blocks us from doing our job? And those are such foundational, basic questions.
Mm-hmm.
But if you can honestly approach those, what you do for your stakeholders, it's an entirely different framework of thought. And I love that you brought his work into it. So let's keep going. Ted Merz, I want to bring him back up. This sort of question that he poses here about why don't other companies do this too? Jack Forehand, roll the clip.
I think the way Buffett handled this was so singular. I mean, if anything, it points out how difficult it is. All the superlatives. Not only has he have this track record that's unparalleled, not only has he done it into his 90s, but also the way he, again, arranged the decision to step down, the way he managed his affairs. It's just, it's hard to think of anybody even similar, in any field. And one of the things that strikes you is how few other companies even try to emulate what he does. So here's a guy, if you said, here's the most successful guy in your field, you would think other companies or people would do more to emulate. And certainly there's a lot of study of Warren Buffett and his valuation techniques and all, but a lot of the other aspects are not followed. And let's even talk about the annual meeting. So one of the biggest ideas in Buffett land is the idea of compounding. You buy undervalued stocks, you hold them for an extended period of time, maybe forever. And the benefit comes in the low trading turnover, the long perspective. Buffett said at one point during the meeting that we don't think in terms of, days, months, years, we think in terms of decades, and that's true. And I think that that compounding, the meeting itself is a meeting of like 40,000 people who go to Omaha, which is really, relatively speaking, hard to get to. There's not like a giant airport. There's not a lot of direct flights. And people come, this I didn't know because it was my first time, but people come from all over. I mean, there's thousands of people come from China. They come from India. They come from all over the world. Many of those people come alone. And they have in common this interest in value investing. But that meeting became what it did. That meeting, he didn't start that when he was huge. That meeting started at the beginning, a long time ago, and it just compounded over the years. So it went from dozens to hundreds to thousands to tens of thousands of people. And I think that's an underappreciated point, is that the meeting itself is like a metaphor for his investing. It is a long-term commitment to the shareholders, to meeting the shareholders, to conveying what they're doing. And that's how it compounded and became such a big thing. And so many other companies and executives want to wait till they're big to announce something, wait till they're big to do something, wait till it's secure. I mean, if you look at Warren Buffett was having meetings well before there was a sense that, he was going to be the GOAT, right? So I think that he these are things that I'm always surprised a little bit that other people don't do. I was actually thinking, why don't companies have more of their shareholder meetings, or more, even more of their analyst calls, just like questions from shareholders? It's because they don't want to. They're not uncomfortable with how. Buffett, they want to stage it, or they want to direct it. They want to make sure nothing goes wrong. He has a very high level of confidence about that.
All right, Bogumil, why? Why doesn't anybody else do this? Where's my Tim Cook annual meeting for Apple? Where's, I don't know, the local bowling alley annual shareholder meeting? Why are there no? This is a great question. Why is nobody copying this?
It's too hard. It's too hard. I'm thinking how in life the principles are very simple. They're very hard to follow. Like, we all know that to lose weight, you have to eat less, eat better, you have to be active. We all know that. To feel well, you have to sleep a full night. We all know that. To have any money, you have to save, say no to some things, put it to work, invest, grow it over time. It takes patience. We all know that. So none of those things are really unheard of and secrets, right? And what Buffett is doing, that's why I started and I said, it's a financial phenomenon, but it's an educational phenomenon. It's been a university, and it was just a space, and it will continue to do so, to be the space where we can be immersed in ideas that clearly worked for them, and I think could work in other places. And everybody is watching what they're doing. It's well documented. These days it's televised, it's recorded. You can go on the CNBC website and wherever else and find transcripts and their books. So there's no secret. But still, it's very hard to do what these two guys did. And at the end, he says, Buffett has this high level of confidence. He does it exactly the way he wanted to do it, including this 5-minute delivery. Greg is taking over. I'm stepping down. You're the first to know. Boom.
Voice crack, mic drop. Boom. All right, we're flying forward now. Eric Markowitz, we got one more for him here, and I think this is a really important last clip to do because he actually gets into the cultures and traditions, which is what you were just talking about. This part of what makes it so special. It's compounding these shareholder relationships. Jack Forehand, one more Eric Markowitz clip, please.
Yeah, I think that the call to community really starts with the culture of the community. And the culture also really is deeply intertwined with the traditions of the culture. So traditions are something that have existed for thousands of years, and I think often are kind of cast aside in the businesses that we see today. The businesses that operate today are largely transactional. It's about doing your work, getting it done, being efficient, and moving on to the next thing. And I think what you see in enduring business models, and especially that's a theme that's very clear across my research so far, is that tradition is embedded within the culture of the organization. So what that means really in practice is even something as simple as, let's take the case, I'm going to visit the oldest boat builder on Lake Como next month. And so the craftsmanship of what goes into building each boat, I mean, that's arguably a tradition. Just using the hand tools to physically manufacture these boats year after year, decade after decade, that itself is a tradition. The physical act of doing it creates a culture and a level of respect towards the product. And it creates a level of respect towards the customer because you're physically creating something with your hands that takes, in some cases, hundreds, if not thousands of hours. And I think that again is just a theme you see across these enduring businesses that you don't find as much today, where emails are just shut off, products are released, things are sold without much quality and attention to detail. And in the short term, that works. You can create a widget, sell it on Instagram ads, make a bunch of money. But the power of endurance, I think, comes from really slowing down and focusing on the craft itself, which is a reflection of tradition and a mindset.
I know this is the source for Eric's upcoming book.
Yeah.
But just the idea of the respect for what you make the customer, and in this case, part of the experience of being a shareholder. And I don't even know if Eric just said that word or if it just jumped into my brain. The respect for what you make the customer. What a weighty topic that I just don't, You can't throw that one around lightly. It's a short list of companies who truly respect the experience of what they make the customer. What do you think?
There's so much to unpack, and I love the topic of enduring businesses. I'm thinking of enduring family fortunes that it takes businesses for those fortunes to endure, and Eric is doing some remarkable job now researching those and what it takes.
And that's a cool overlap too between, I mean, you as an allocator and investor for families across generations, what you're doing is almost closer in kind to a Berkshire Hathaway approach than, say, if I were to go start up a company and say, I want to be the next Berkshire Hathaway. The family fortune thing is more in common, I think. Is that true?
It's very true. I mean, it's going from the quarterly thinking where most of the investment profession is these days, what the earnings will look like, to Berkshire's thinking in terms of, decades or more. I actually asked Buffett and Charlie at the meeting about their 100-year vision, and the audience can look up the clip, but it's a fascinating story. They tell me how they built something that's meant to last, and that's what Eric is talking about. I want to mention something more like personal and maybe something more relatable for the audience. When you go to the meeting, don't be surprised that you'll take a shuttle from your from your hotel, a bus, and you're going to sit down next to somebody and they strike up a conversation with you. And don't be surprised that it might be a couple, usually it's a couple, from somewhere in the middle of the country. And they have a job they've had for the last few decades that has nothing to do with investing. But at some point in their life, somebody told them, what do you do with the excess cash that you have? And invited them to invest, or just mentioned to them, how about you invest in Berkshire? No recommendation, do your own research, right? Like, that's obvious. They bought the shares, and they've held the shares for 30 years. They come to this meeting, they're taking the shuttle with me, but they could buy the shuttle and probably a small jet. But the power of compounding over 30 years made them very, very comfortable. And you hear a story after story after story of people like that. I had a taxi driver in Omaha whose grandparents put money in Berkshire because they just trusted the guy. I asked why. They just trusted the guy. They knew he's doing the right thing for the right reasons. That's the culture, the traditions, the things that Eric is talking about. They knew he's doing the right guy. He speaks our language. That's what people tell me. Like, he just speaks like us. He speaks like we think. And this taxi driver is telling me, when I was growing up, I was surprised how my grandparents would take me on those expensive trips. I never knew how they could afford it. And it's because they were Berkshire shareholders. Also very modest households, but the power of compounding allowed them to financially be very, very successful and leave something for the next generation, which is something, really powerful. I have this idea that each generation shouldn't start from zero, that each generation could build on top of something that was built. And here we're trying to build on top of something that Buffett created. Let's not forget that Berkshire Hathaway was a failing textile mill business in the Northeast. Competition was coming in from outside and inside. Pricing, pressures, costs, everything was going against this business. And he took the capital, the cash flow that was available in this business and created something that not only survived, but became a $1 trillion company. I mean, think about it. I mean, that starting point is not where you would really look for success.
All right, so my parents clearly, instead of Berkshire Hathaway, they just jumped straight to Cherry Cokes. And not begrudgingly, but all I got was Dairy Queen and Cherry Cokes, and it raised me well. Let's just put it that way. It raised me well, and they're doing okay too. You got to tell me, you've been holding out.
Yes.
I need your thoughts. I can't just bug you in our text chats with each other. What was it like being there? Sell me on why I need to come with you next year, all the things.
I want to take this audience and you to those last 5 minutes the way I experienced them. And I'm going to try not to choke up, but there was this moment when Buffett delivered the story here. Greg is taking over, I'm retiring. As Adam said, the room turned absolutely silent. And it's hard to believe because there's 20,000 of us breathing in a room. And it got silent. It was just Buffett's voice. Throughout the day, there's always a little bit of chatter, nothing. And there was this moment where I felt sadness and heaviness and kind of this sinking emotion of, it's over. Like something has ended. And Buffett is brilliant about reading the room. And I think he felt what I felt, and he thought, he's a cheerful guy. He can't leave it like that. And he added something that changed the emotion, the sentiment in the room. He said, I have no intention of selling a single share. He said 0. And the room just erupted. You know, people got up, they applauded, and it was a minute or two of us just standing and applauding. And at some point, if you look up the transcript, he says, okay, calm down. But the delivery and the reaction and reading the room, it was just masterful, you know, just to see how he knew that he had to tell us that, yes, he's retiring, but he's not leaving us. Many CEOs, the minute they leave, they sell all the shares and move on to the next thing. He said, no, I'm not doing that. I'm staying with you. And any piece I wrote about Berkshire the last few years, I always said that I felt that the shareholder is on the pedestal, not the CEO. It's the shareholder. It's you and I, everybody in the room. All the way from the fact that only his kids knew about it, we are the second to get to know the story. It's such a powerful message, how much he respects us as a shareholder. And I think all of the corporate culture, shareholder culture, could learn from it, that who is important in the whole thing, and without whom this business wouldn't exist. And it's the shareholder.
I have to follow up with this question. You really believe, and I have no reason to disbelieve this statement, that he read the room after making that statement and was like, I have to say something else. Not that he didn't already know the answer, that he wasn't going to sell a share, the way he was going to do that. He might have known that in himself.
Yeah.
But you really feel like he made this statement, felt the air go out of the room.
Yeah.
And was like, I have to end this on the note I want to end this on?
Maybe I'll get to ask him one day, but if I was to read the reaction and the delivery, that's what I walked away with. We were desperate for something to be enthusiastic about. And he knew that we needed it. He wanted us to know that it's going to be just fine. He actually says at the very end, he said that this enthusiasm, once people, erupted and they're applauding because he's not going to sell a share, he says it could be taken in two ways. And he's chuckling, he's laughing, But we were applauding not because he's leaving. He was joking about it. We were applauding because we appreciated that he will remain with us on this ship. Maybe not as a captain, but as somebody valuable and important to the business. I want to add one more thing here. If you pay attention to the details when he says what he says that follows, in between those two moments when he walks out, he says that if we have a period of more opportunities, he's ready to make himself available. He repeats that more than once. And I think it's a very powerful thing. He is the person that has picked, I don't know how many stocks over the last 70 or 80 years. I don't know when he picked the first stock. I think he was, 7 or 6. Whatever the math is, 90 years almost. Anyways, he loves the process and he loves investing so much that he basically says, if the markets get interesting, you guys can still call me. And that's a message to the board. You can still call me. I'm a major shareholder. I know a lot. You can still call me. And I love that because I saw somebody that all the way just loves what he does. And that's the message he left us with.
Well, I can't think of a better way to go out than on that note. That's Bogumil Baranowski, Mr. Talking Billions himself. I'm Matt Zeigler at Cultish Creative, all those things. This is Excess Returns. Like, subscribe, leave a comment below. Make sure John Candeto, Adam Mead, Ted Merz, Eric Markowitz, look for their stuff in the comment, or whatever you call those things below us, the comments below. Go find their information, follow them too. They're doing great work. Bogumil, this was so much fun. Thanks for joining me.
Thank you for having me, Matt.
All right, we'll see you guys all soon.
Thanks so much for tuning into this episode. If you found this discussion interesting and valuable, please subscribe in either iTunes or on YouTube, or leave a review or a comment. We appreciate it.
Jack Forehand is a principal at Validia Capital Management. Matt Zeigler is Managing Director at Sunpoint Investments. No information on this podcast should be construed as investment advice. Securities discussed in the podcast may be holdings of clients of Validia Capital or Sunpoint Investments.